Well, I've been sitting here all day, I've been sitting in this waiting room, and I've been waiting on my friends, yes, I'm waiting on this conference call, all alone, and I'm on hold. Well, yes, I'm on hold. I hope it's not all day. Well, I wonder where they are, yes, I wonder where my friends have gone. Where'd they go? Tell me, where could they be while I'm waiting on this conference call? I don't know. Well, I'm holding on my phone, yes, I'm holding on the line. Hey! I don't know where they are, I don't know why I'm still alone. I'm on hold. Oh yes, I'm on hold. I hope it's not all day. Hey!
Well, let me tell y'all a story about a man who was on hold all day. Yes, he was. Now, maybe he had the time wrong, and maybe he didn't. There's just no way for me to say. And yes, I have seen some long hold times in my day. Yes, I have. And this was one of the worst. Now, this young man did not hang up the telephone, and you guess what happened? Yeah, that call began. That call started.
So stay on hold. You gotta stay on hold. Don't go away. Well, I've been sitting here all day, I've been sitting in this waiting room, and I've been waiting on my friends, yes, I'm waiting on this conference call, all alone, and I'm on hold. Well, yes, I'm on hold. I hope it's not all day. Well, I wonder where they are, yes, I wonder where my friends have gone. Where'd they go? Tell me, where could they be while I'm waiting on this conference call? I don't know. Well, I'm holding on my phone, yes, I'm holding on the line. Hey! I don't know where they are, I don't know why I'm still alone. I'm on hold. Oh yes, I'm on hold. I hope it's not all day. Hey!
Well, let me tell y'all a story about a man who was on hold all day. Yes, he was.
First off, I hope you understand that the Federal Reserve doesn't control mortgage rates. Yes, the Federal Reserve doesn't control mortgage rates. So then the question is, well, why do we care what the Federal Reserve is going to do at the next meeting? Why does the stock market care? Why do mortgage rates care? Well, that's what we're going to talk about in today's video, folks. So my name is Dan Frio. I come in each day to explain to you guys what the heck's going on with those. And today we want to talk about, well, we're going to talk about the 50-year mortgage briefly because that's how brief it was in the markets. But why are the markets reacting today on basically the news coming out that the Fed's probably most likely not going to cut rates? After this video, you tell me down below what you think. So I'm not here to tell you what's going to happen. I don't know what's going to happen. I truly don't know. When people come out here and give you all this information, we don't know what's going to happen. We try to give you the most logical outcomes. So let's get to it. So the most logical outcome today was, well, mortgage rates went up and the stock market went down. But here's another piece of the puzzle. I don't know if you saw this. I was privileged enough and blessed enough to be on several big channels this week. News Nation, The Hill, NBC called me, had an interview. They were all talking about the 50-year mortgage, and that was my basically time in the limelight as long as that 50-year product remained out there, and it's basically gone at this point. So let's get over to the next thing we really want to talk about. What's the Federal Reserve going to do at the next meeting? And why do we care? We just said, okay, why? Well, first off, that might be what you're asking. Why do we care what the Federal Reserve is going to be doing? Because they don't control mortgage rates. What do they do? Well, that might be the question you ask. So if you're a loan officer out there, maybe you're a realtor, or you might be a consumer looking to refinance or buy, and I got tools for you guys. But I want you to help you explain to your borrowers what's most likely, logically, going to happen. Not what we want, but what most likely is going to happen. So in 26 days, the Federal Reserve is going to come out and tell us what they're going to do. I'll kind of give you how all the people are going to vote. Yes, I ran the numbers, and I'm going to give you that tally here in a little bit. But first off, who's the Fed and why do we care? Okay, so here's what they are, and they have an influence on where rates go. So let's just briefly cover this real quick. First off, just let me know if you can hear me well. Last week, I apologize. Nobody let me know the audio was terrible. And then when I was doing editing, it was like I was basically in a tin can. So let me get my camera and everything adjusted here. Okay, so let's get over. Why was the Federal Reserve created? Well, they were created years ago. Right through here, the Federal Reserve, or the Fed, is the central bank of the United States. It was created in 1913 after a series of financial panics because the country needed a more stable and flexible banking system. Why was it created? Well, to stabilize the financial markets, provide emergency support to banks, and manage the nation's money and credit. Whew, that's a pretty bad job there. But there are two mandates is this: stable prices, which we know is inflation, and then maximum job security or maximum employment. Anything basically under a 5% unemployment rate is deemed full employment. So this is what they look at. But here is what happened. Right through here. The Federal Reserve, they control that rate over there. And I'm getting to something because this is a big move that's most likely going to happen in 26 days that maybe now is being official. The Federal Reserve controls that rate over there. It's basically interbank lending. When one bank needs money overnight or something like that, they go to get money lent to them, and that's the rate they pay. But when they get their rate raised, they raise it on the consumers, us. But when they drop it, then it goes down. But here's what they look at. They monitor or they control this, the Federal Reserve. And then over through here, these are the things that they look at. Well, let's get over to here. Here's basically what's causing the problems right now. The dot plot. Okay, what the dot plot is a couple months ago when the Federal Reserve met, and they do this 4 times a year to create the dot plot, the members of the voting committee put a dot where they expect rates to be for the year. Okay, so what we see here is in 2025, most of the dots are between 3.5 and 3.75. See it right through there? Okay, but the federal funds rate right now is 3.75 to 4. So that means they're going to cut at the next meeting, but they're not going to cut. So this is what the markets are saying. Okay, we were expecting rate cuts, and now we might not get them. Now, next year is a mess as well. There's really no consensus here, but the consensus is still at 3.5, 3.75. So this is most likely going to cause rates, especially on the long end of the curve, to stay sticky. So mortgage rates, I'm still staying with my predictions. I've been predicting 5.99 to 6.375 for Q1 or Q4 of this year, and then most likely rolling in to the following year. If you're a homeowner out there and you keep missing this, you're like, okay, I thought rates would come down a little bit lower, but they're not. I created a system for you guys. So if you're a homeowner out there and you're watching, check out our RateWatch tool. It's right through here. It's RateWatch 2.0. What this gives you the opportunity to do is let me know what interest rate or mortgage rate you want. And when the rate hits there, I'll call you. We'll go over what your new payment's going to be, what the cost, what your break-even point, and we'll point you in the right direction. If it works, we'll get you locked in and move forward. But I don't think if you're thinking for rates to drop anytime soon, I don't think they're going to go. So let's get over to here's the members of the Fed that actually have the ability to vote. So you go through here, and here's the Federal Reserve's next meeting outcomes. So again, this isn't possibly what you want to hear, but this is the most logical outcome. So if you guys got any questions as you're coming in, let me know. Let me see if we got any chats out there and who's out there with me today. Hold on one second. I got to get rid of this. Oh, we got a bunch of people here today. So thanks for joining me today. Here, let's see what it's got first. Marv's, you are first. So thanks for joining me today. Trump is making Fed fly blind. Yep, I guess that's what you want to say. The markets, because the government was shut down, they didn't have the data that they needed to do that. I don't want to be political here, so you can post on other channels what you think on your political views. But I just want to take this. I'm out here for all of us. Okay, I'm a dad. I'm a husband. I put my kids through college. I put my pants on just like you. I hear all this noise from all these. I wish both parties would just get together and do what's best for all of us. It seems like it's just a nasty, nasty divorce that, if one says one thing there. But again, we're not going to be political here on this channel. So let's keep going and see if anybody has any questions. And then we'll get over to, this is what the Federal Reserve, the most logical outcomes. And we're going to go member by member by member of each voting person. And we'll tally the outcome at the bottom. When we're all done with this today, I really need you guys to let me know down below, what do you think's going to happen, especially if you're a loan officer out there? Do you think, when we're talking to our clients, the realtors and the people out there looking to buy, they want our direction? So let me know down below what you think. So let's get to the next thing here. Just really want to know if higher unemployment numbers will help the stock market and rates. The 10-year Treasury didn't do anything, and it's been 2 rate drops already. So I'm with you, and that's where you sit here and you scratch your head, but we don't know. And that's why there was another analysis today. Here, let's get over to, I'll jump over to here in 1 second because this is what you guys asked. Right through here. Steve Leisman, that was our next slide. The data that they're getting, and this is why I stopped it right here. Alternative jobless claims data showed little changes, some improvement. So I was on your bandwagon. I was like, okay, this is going to be bad because we had that employment number from Challenger. They do a survey and they come in and they tell us, what the jobs market looks like. And they had it 1 month. They showed October. I think it was the month of October. 150, I think 3,000 layoffs, like the biggest ever in 22 years. So then you sit there and you think of that, it's like, okay, that's terrible. But then you have ADP coming in with their analysis, and they're coming in saying there's about 50,000 jobs being created. And basically the break even in the economy, all the analysts are saying it's about 50,000. I don't know. So that's what they're telling us, and that's what I parlay over to you guys. So that's what we're facing right now. So let's get over to but I get with you. So let's get to some more questions out there. I don't want to just ramble on one of them. The Fed wants to control spending, but won't tell us the unemployment needs to go up. And got it. I got what you're saying. So yeah, we'll get there. So here's where the voting members of the Fed are sitting right now. Okay, so you tell me this probably isn't guesses. You can come in here and say, yep, he did, yep. There might be one outtaker, but at the bottom of this, let me know what you think. So Steve Marin, he was just appointed to the Fed by President Trump. I think it was just about 3 months ago. It was right before the 2 meetings ago for the Fed. So that would have been about 12 weeks ago. He came in and said he wanted 5 rate cuts. And so we're going to scrap him out, but you automatically know he wants a rate cut. Christopher Waller, he's on the other camp of he wants to be the Fed chairman, so he's now voting for, and he's always been in this camp, he's voting for probably rate cuts as well. Michelle Bowman, same thing. Yeah, they're in contentions for the chair. John Williams, he's most likely in the rate camp cut too as well. So there's 4 people that's going to say, okay, we want rate cuts. Okay, but there's more members. Now here's are the people that are on hold. So what's going to happen is anybody on hold and anybody says, maybe increase rates, they're going to nullify the ones that want to cut. So let's go over Jerome Powell. He's not going to want to cut. He's the Fed chair, and he's just going to try to stick it to the administration, I think, as much as he can. But in this move, he's probably justified with the data that we have. Lisa Cook, this is the one President Trump's trying to get fired. I just want to be candid on the channel, folks. She's probably going to be undecided as well and stay on the side of a hold. So she's most likely going to be hold. It says undecided. I can almost assure she'll be a hold. Jefferson, he's most likely a hold. Barr, a hold. And Austin Goolsbee, he is the federal chair president at the Chicago Fed, my local one here. And I'm going to say he's on the fence, but he's going to be on a hold pattern if we get the data on the jobs report that isn't as bad. Now, the Chicago Fed came out with a report 2 weeks ago saying the unemployment rate that the Chicago Fed has put together is 4.3. The national average right now is 4.3. So he's saying there's really no move there. And then again, we have Steve Leisman coming in with additional data today. This was live, saying that there's really no moves there. Well, the jobs market might not be as bad, hopefully, as some are deeming it to be. What it is, I don't know. I get the mixed signals as everybody else has. Now, you go down through here. Here's the ones that are going to say, absolutely, we're not cutting rates. And these 3 are exactly, they're going to say that. So now we want to go down through here and tally this thing. And the reason being is we want to figure out, are they going to cut or no? So we got favors cuts 4. Well, there's a total of 12 members. That means 8 want to hold or oppose the cuts. I guess a hold. So they're probably not going to cut at the next meeting. So now the markets are doing what the markets do. And now they're adjusting because, again, what you had previously, you had these dot plots were signaling, okay, just not many months ago, that the Fed, this is their words right through here, we're going to cut down to 3.5 to 3.75. So if they don't cut at this next meeting, that skews the data. Now the market's got to say, okay, now we have to readjust our numbers. So now you go over to this, and now this is what's readjusting in the market. So we focus in on, and we focus in on mortgage bonds. So if you're looking to buy a home, you're looking to refinance, probably most of the people that I got on my channel, hopefully you're a homeowner, home buyer, and looking to build, but I probably get a lot of realtors or loan officers. So we dig in really deep in this, and what I might start doing is trying to put chapters down below. So if you're a homeowner, some of this data you might be interested in, but I know I get a little too in depth, like this right through here. If you really truly want to know what's going on with mortgage rates, what you would follow is a mortgage bond, and that's what we do in the market. If you're a realtor out there, maybe you do that as well. But this is what we watch. So if you're not, you really don't understand how the bond market works or anything like that, just watch the 10-year Treasury. Okay, this is the government bond. So this is a mortgage bond. So the rate on this is, or the yield on this is basically your mortgage rate. But if you go over here, this is the 10-year Treasury. They kind of go in the same path, sort of. Okay, the 10-year, the MBS, this gives you the price of the bond. And it says it's going down today. This year on the 10-year Treasury, it's giving you the yield, and it's saying it's going up. So when the price of the bond goes down, yields go up. So you can also watch the 10-year Treasury if you don't have access to the MBSs. All you have to do is say, okay, if this thing's moving up, well, most likely mortgage rates are moving up as well. So that's basically how that works. Okay, so let's get over to here. The next thing I want you guys to understand is mortgage rates. So again, if you're a realtor out there, loan officers, you should be able to explain this. And if you're a consumer watching, trying to understand the mortgage market, how mortgages work, how do you find the best rates and mortgages out there? Well, let's slide back over to me one more time. I have a RateWatch tool right here, but I never really told you what I do. So folks, my name is Dan Frio. I've been doing mortgages for over 35 years. I'm licensed in all 50 states as well as Puerto Rico because the bank I work at provides me that licensing. The unique thing here, though, is the bank is set up with over 30 other lenders. And the reason why we did that is to give you options. So when you call in, I have the opportunity to use my programs, rates, fees, or any of these other programs from all these over 30 different banks. That's how we can be as competitive as you can possibly get in the market. So if you're out there trying to find the best rate, lowest fees, check out our website right through here. Give us a call, schedule an appointment. It's right up through here. I've been doing this over 35 years. I'm in every state out there as well as Puerto Rico. Love to help you out if you need some help. So let's go back to the front of this. Let me know if you guys have any questions out there where you think mortgage rates are going. Let me know what you think. So based on this, the news that we got, well, most likely the Federal Reserve's not going to cut rates. Do you think rates are going to go any lower? Well, that could go one way or another. Let's dive into some technicals we really want to look at. Okay, so one thing I wanted to go over with you guys. Well, let's go over the mortgage rates. My apologies. I wanted to kick back to that. Sorry, I got a squirrel moment there for a second. When you're looking out there for mortgage rates, here's what you find sometimes. So let me zoom this in a little bit. So what I did is I went in there and said, find me the lowest rates and lowest fees when it comes to a 30-year mortgage, and then give me the mortgage options for all the other stuff. So here's what this brought in for me. The first thing you're going to look over here is this is the national mortgages rates. Is Mortgage News Daily is posting their 30-year fixed rate is 6.34, and then Bankrate is posting a rate at 6.26, and then Forbes is saying their rate is 6.36. What is it? So if I'm sitting here and I'm a consumer, you realtors need to know this. If I'm sitting here, it's like, what is it? So you have to understand what this is. This is marketing. How do you really find your true rate? Well, you have to understand a lot of things. What's your budget? So what's your debt ratio? What's your credit scores? What's all this stuff? That's how we can help you navigate through this. So if you're looking to buy or maybe build, reach out to us. We'd love to schedule a consultation with you and to go through all those things. You might try to disqualify yourself. A lot of people, here's what I find, a lot of people disqualify themselves and don't really put themselves in positions to even try. Give it a whirl. This doesn't mean you have to take a loan, doesn't mean you have to buy a house or refinance. It just, you want to understand a little bit more about this. So schedule a consultation with us. We go over what your budget is, what your true credit is and credit scores are, and then what program is best for you, and we'll explain them all, and then you choose what's best for you. You're the boss. So let's get back over to what we want to talk about, some things over through here. So let me see if I'm missing anything. Now we get over to some of these other things. We went over mortgage rates. Let's get over to this. Let's talk about the stock market. Maybe it'll entice you guys to answer some questions down below with the stock market. Do you think the AI bubble is going to blow up in our faces like 2000? Many of you might not have been around the year 2000, and it was crazy. You'd have it would be dogs.com, and they would, I guess, run to the pound and buy you a dog if you wanted a dog and ship it to you. It was stupid stuff like that. What you're seeing right now is the AI industrial bubble right now. Is it a bubble? I don't think it is. And I'm going to go out on a limb here and go over that. I know I'm not a stockbroker. I'm not an analyst. I just want to show you the direction where I think things are going, because every day you get news from all these places, and I just want to give you my take on it. If you're kind enough to be here and join me each day, hopefully you're learning some things from this. So let's get over and see one reason, just a tax code reason in the big beautiful tax bill, that a lot of build outs might be happening. You see every day AI is spending $1 billion on this and $100 billion on this and $1 trillion on this, and it's mind boggling. It's like, where is all this money? But I have a lot of people there are a lot of friends in industrial sales, and they're like, it's crazy right now. I'm like, with what's going on right now with tariffs, they're like, yeah, it's crazy. Why? Well, let's get over to this piece. Here's where I think a lot of people are missing the puzzle. Part of the big beautiful tax bill help companies. And if you're out there saying, I hate these big companies and everything else like that, well, here's a deduction they're going to get that's fantastic for the businesses. Okay, what they can do now is right there here. What's changed? 100% deduction. Under the new big beautiful tax bill, businesses can generally claim 100% bonus depreciation on qualified assets. What are the assets? Applies to qualified property, typically tangible business property with a recovery period of 20 years. Who this is really going to help? Look at the winners. Who really benefits? Industrials, utilities, AI, power companies. These are all the companies that are really going to benefit. So if sometimes you're thinking, okay, is this bubble really going to pop? They're getting a huge benefit by doing all this infrastructure build right now. So if you missed part of these bills, hopefully those are some things I can help fill in the void for you guys. So let's go back to the front, because that's about all. Well, the portable mortgage, that's another thing, like the 50-year mortgage that the Trump administration is coming up with. And I don't think this is going to be very technical or very thought out either, because let's say I want to move from a house that's, I have $1 million loan on, and I say, screw it, I want to downsize and I want to buy a $200,000 home. How's that work? Or I have a $150,000 mortgage and now I'm buying a $600,000 home. Do I need to move? I don't know how it's going to work. So scrap that idea, folks. If you're really trying to find out where rates are going, can you afford a house, please just watch me, subscribe down below. Every time I come in each day, I'm trying to explain to you guys what the heck's going on with those and the whys behind it. So let's get to any questions that you guys might have. I know it's a Friday afternoon and it is a wild week. So if you don't have anything, I can let you go. Marvs, if you are ever interested in reaching out to me, my friend, just email me. We can actually have a conversation on the side if you'd like. But I greatly appreciate you joining me today. So again, folks, if you're a realtor out there, you're a loan officer, I'd love for you to subscribe as well. Folks, realtors, reach out to us. We have products, and I'm qualified and licensed all over the entire country. If you're a loan officer, maybe a loan officer team looking to make a move to get federally licensed, be able to work with over 30 different lenders, reach out to me as well. Love to help you out. If you're a home buyer, homeowner, the one thing I would suggest you do, watch each day. Watch for 5 minutes. I'll go over what's going on with mortgage rates, the whys behind it, and then also reach out to us. Schedule a consultation. We can walk you through the process, basically from application, the keys in your pocket. A lot of people are finding out that have a mortgage right now, refinancing. This week, I saved over 2 people on refinances, over $600 a month. $600. That's a lot of money. So check out how much you could save checking out the RateWatch tool right up through there. So that's our report for today, folks. I know it's a Friday. I want to get out of here. I know you do too. So thank you so much for joining me today. Check out the rate update. Check out, make sure you subscribe down below, and I'll be back here